Hello team and welcome to Daily Market Movements. Welcome to another episode of Industry Watch. On today's video, we're going to be having a quick look at our position in the NASDAQ100, and then moving over to the S&P 500 price chart. Before I start, just want to say a massive thank you for your patience this week and a happy new year. This is officially our first video of 2022. Apologies that it's come a bit later in the year than I initially anticipated and wanted, and that's due to the fact I've been traveling the past couple of days. I've flown from the UK to Dubai, so yesterday was my flight, and a bit jet lagged this morning, but nevertheless, as I promised over on the Telegram group chat, I will post a video today. So let's just have a look at the NASDAQ 100. NASDAQ 100 has unfortunately fallen back towards our entry point. Reason being is because simply the market right now favors value over growth, and that's absolutely fine. It's all part of the market cycle. We've been constantly switching between growth and value. However, growth has definitely outperformed over the past 12 months, and this is just another leg of this market cycle where we've switched from growth to value. So it's very difficult to predict what the market's going to do from a day-to-day perspective or even a week-to-week, but what you can predict is month-to-month or year-to-year. And we're moving in the right direction here. We're kind of just moving up the stairs. This is the kind of pattern that we're forming here. You could argue that we're marching higher in terms of stairs. If these were stairs, then I fully anticipate that we will bounce off that 50-day EMA and form a next leg higher. And if we have to come back down a little bit lower, then that's absolutely fine. But eventually we will hit our take profit up at 17,000. I'm very certain of that. Unfortunately, the market doesn't just go up, guys, okay? Because if it did, it wouldn't be called trading. It would just be called winning and or gaining. And unfortunately, we do have these down days, and today is the second one in a row. And in fact, I was quite surprised yesterday that we did actually trade down like this, but it perfectly makes sense. We're just seeing part of the market cycle where we're switching from growth to value, but all of a sudden this will switch back into our favor, where the market will go from value to growth. All it takes is a little bit of negative news with regards to COVID, the new variant or countries locking down, etc., and all of a sudden it's in our favor when the market switches back to growth. So I'm not worried at all. We're well supported by the 50-day EMA. We've just come back down towards our entry point. Our stop loss is all the way down 15,400. RSI is all the way down at 47. So we have plenty of technical reasons as to how or why we could march higher here. So it just comes down to patience, guys. So it just requires a little bit more patience. I know that it's very frustrating, but we will get there eventually, whether it's this week, next week, or the month after. We will eventually get there. Let's move over to the S&P 500. S&P 500, of course, we do not hold any positions. S&P 500 is actually digesting its gains very nicely. This is something I wanted to happen in the NASDAQ 100. We've had that nice gain here in the NASDAQ. I was looking whether we could digest our gains here, but we've actually come back and tested support where the S&P 500 has held it rather well. And what I anticipate from here is a continuation of the upside. The S&P 500 is slightly different from the NASDAQ 100. The majority of stocks held in the NASDAQ 100 are growth stocks, where in the S&P 500 you have a basket of value and the growth stocks. So I think today, yes, you're seeing some downwards pressure from the growth stocks underperforming, but you're also seeing the value stocks outperform. And it seems to me that the value stocks are those that are holding up the S&P 500 here. So I think once the tech trade returns, once we have money rotating from value back into growth, that's when we will see the next up leg here for the S&P 500, and we will go and trade above 4,800. Worst comes to worst, I think we get moved down towards a 50-day EMA down at 4,658, but that wouldn't be the end of the world, and you could just trade it back towards the back towards the highs. But unless we get that move down towards a 50-day EMA, I will not send out a signal for the S&P 500. That's technically the risk reward ratio just isn't in our favor up at these all-time highs. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.